Good day, ladies and gentlemen. I'm going to take you on a breakdown on how we manage to trade the market structure in collaboration with the SMC strategy and catching trades that give us 10 risk to reward ratio and above. Stick with me, and at the end of this video, you are going to learn a lot from it. This is a paid knowledge, but I'm going to give it out for free in this video. Stick around, guys. So I'm going to use this line to explain. Then after explaining with the line, we now apply it to the chart. When you approach the market, what do you look out for? Firstly, you look out for if the market is in a bullish trend or in a bearish trend. That is the first thing you look out for. How do you know if the market is in a bullish or a bearish trend? Now, first thing you do is you spot out the recent break of structure. Is the break of structure to the upside or the downside? That will give you a detailed information where the direction of the market is. As you can see here, we have here a low, we have a high, we have a pullback, and we have another high, a higher high. Now what we can see here clearly is a break of structure, indicating that we have bullish trend. Spot out our POS. When we spot out this break of structure, it now gives us a clear understanding that the market is in the bullish trend. So how do we read the market in a bullish trend, and how does it help us to catch our moves? After confirming that this is a break of structure to the upside, we kindly spot out our swing low. Swing low means the lowest point of a particular market trend. After spotting out the swing low, what we want to see in the market is that this market should come back around this place and make some reactions here. After making some reactions here, it gives us a higher high, breaking this previous high, making this one another break of structure. Let's kindly put it in place. Once we see a new break of structure form like this, the next thing you do is you remove the swing low from the previous low, which is this one, from the previous low, which is this one, to the current low. This is our current low. Why did we remove the swing low from the previous low to this current low? It is because this previous low has lost its validity since the pullback has given us a higher high and we have a new break of structure. That is why we no longer consider this low as our current low. We now consider this one as our current low. After this low, what are we expecting? We are expecting that the market give us another higher high and then give us another lower low, confirming that we are still in a bullish trend. In this lower low, one thing you should know about this lower low is that we don't expect the market to come below the swing low. It will always stop somewhere around the pullback phase and then give us higher prices, giving us a higher high. Once the market gives us this higher high here that we can clearly see here, we spot out our break of structure. After spotting out the break of structure, we update our swing low here. Swing low updated. What are we expecting? We are expecting that when price gets here, it gives us a reaction from here and continue going up. But this market comes here and refuses to give us a higher high, instead give us a lower low. It then means that what this swing low now has automatically becomes a change of character. Change of character represented by a church. As simple as that. Now, when the market put up this church, the next thing we are looking out for is to cover the highs. We mark out our swing high. Very, very important. This case is vice versa. It can be the opposite side, bearish changing to bullish, but this is bullish changing to bearish, so we mark out our swing high. This swing high indicates that when this lower low gives us a lower high, the lower high should not come above the swing high. If the lower high should go above the swing high, it means that it's another change of character. People often ask, how many times can the market change character? As often as the market wants to change character. This strategy we are trading, we are not here to determine the direction of the trend. We are here to follow. We are only following what the banks and the institution are trading. We are not making any decision. So we don't care about the direction of the market. All we care to know is to know when the market is moving. As simple as that. Follow it when it's moving. This is how simple this strategy is, and I'm taking my possible best to explain it in such a way that you can apply it and then get result. Good. After this, we expect that this market come to this place now, give us a lower high. Then after the lower high, the market gives us what? A lower low. After this lower low, what do we do next? We kindly spot out our break of structure. Break of structure. And then we update our swing high. Simple, right? Just the same thing over and over and over again. It doesn't change. The same strategy. If you can follow this pattern successfully, then your journey to profitability will not be that difficult. Again, as a newbie, here is my advice for newbies. If you are a newbie, what I want you to learn is to learn how to spot these structures in the 4 hours time frame first. When you have mastered the act of spotting these structures in the 4 hours time frame, then you can now move to the lower time frame. The lower time frame is a more confusing time frame that you need high level of understanding in order to spot the structure. Trust me, if you can spot the structures carefully, you are 50% closer to profitability. Now, having given you a simple breakdown of what market structure looks like, I'm going to give you a complex market structure and then explain it to you how you should read it. Alright, this is complex market structure. I know when you see something like this, you begin to panic. Don't be panicked. It's a very simple something. You just need a clear understanding on how to read it. You get. Now, when you approach a chart like this, you see you have a lower low, a higher high. Then you begin to see some kind of internal structures like this. Don't panic. Let me explain. Begin to see a lower low, lower high, lower low, lower high, lower low. Then you see a higher high. This becomes your change of character. You begin to read this as normal as you were reading the previous external market structure. No, all the things that are happening inside this place here, all the things that are happening inside this place are internal. So you read them as internal. If you read them that way, you are not going to get confused. But if you begin to read this one like every other market structure you read, then you are confusing yourself. And trust me, you are going to regret it. So the first thing you do when you see something, a scenario like this, kindly spot out the external break of structure. Spot out the 4 hours time frame swing low. You see, when you spot it out, you now discover that everything that happens inside of this place falls under internal structures. So once you confirm the internal aspect of the market range, you will start reading these internally. Start reading them as internal structures. When you are taking trades, you take trades as internal structure and things that are happening inside of the 4 hours time frame trading range. You understand? As simple as that. Once you understand this, every other thing will fall in pleasant place. After this pullback, we are expecting a higher high, breaking this structure, making this place a break of structure. It's just the same thing I have explained earlier. It's just that this one is a bit confusing, but if you pay close attention, you will discover that it's not that confusing. After the break of structure, we are expecting that the market gives us a pullback. Now, this is where many people make mistakes. Many people make mistakes thinking this is the current swing low. This is not the current swing low, it's an internal swing low. We read it as internal. The market tends to come back and use this as liquidity most times. If the market does not want to use this as this liquidity, our lower time frame confirmation is going to tell us, so we don't tend to make any wrong decision in the market. Alright, so once the market is pulling back, you see the market pulling back, clearly update your swing low. See, very clear, you update your swing low. Now this swing low tells you that the market will not come below the low. It will not come here, it's only end somewhere here, then revise back to the upside. Alright, this is a simple explanation. I further to explain them in a much way that you are going to understand. Once the market gives you a pullback and then another higher high, we clearly mark out our break of structure. If you do this thing will be as easy as anything. Mark out our break of structure. Now, one advice for you is, no matter the strategy you are trading, if you understand this market structure properly, it will make that strategy much more easier for you. Even if you are trading ICT, trend line, support and resistance, if you understand the way the market moves, you have an edge over the market. You get, as simple as that. Now let me explain how to read internal structures for you. Beautiful. Let's take the black line to be a 4 hours time frame line. Let's take the red line to be a 15-minute time frame line. Now, taking example from the explanation I gave you, from the chart view I gave you earlier, you will notice that we have a low, right? You are going to notice that we have a low, we have a high, and we have a pullback. Simple, right? Then we have a higher high. Clear? Good. Now, when you see something like this in the 4 hours time frame, this is the 4 hours time frame line I'm explaining now. If something like this, you clearly mark out the lowest point of the 4 hours. This is the lowest point. We call it swing low. After marking the lowest point, you spot out your break of structure. 4 hours time frame break of structure. See? Clear? Good. Now, after marking out everything that has to relate with the 4 hours time frame, you know that your trading range is here. This is your trading range. You are more focused on things that are happening inside this trading range, inside this rectangle. You are more focused on things that are happening inside here. Now, let's imagine that the 4 hours time frame was not yet here. It was somewhere. Was not yet here. It was somewhere around here, or it was somewhere around here. It was somewhere around here. When this pullback starts, you start focusing on things that happens inside of the pullback. So you start seeing things that happen inside the lower time frame and inside the internal structure. Now let's relate back to what I showed you here earlier inside of this place. Now let's take it back to the chart. Let's take it back to a more deeper explanation. Capture this place in your head, right? Let's take it back to the other side. Now capture this place in your head again. You see that they have resemblance. They are almost the same thing. They are the same thing. The only thing that is different is that the 4 hours time frame line is present with the 15-minute time frame line. That is the only difference. Now, if we decide to remove this 15-minute time frame line, if we decide to remove the 4 hours time frame line and leave only the 15-minute time frame line, you see that this is how the market moves in the 15 minutes. It's not magic. It is just a mutual way of understanding. This is how the market moves in the 15-minute time frame. We use the 4 hours time frame to know the direction at which the market is moving. Then we use the 15-minute time frame to take trades. Simple. We bring it back to make the explanation more clear. When the 4 hours time frame is moving like this, we tend to see series of break of structure. See, break of structure, break of structure, break of structure, break of structure, change of character. Once you encounter a change of character like this, you do what? Spot out your zone from where you are ready to take trades from. You sell. You continue selling. This is a break of structure. You look for a sellable opportunity here. You have another break of structure. You look for a sellable opportunity here to continue taking the sell. Simple. After you see the last break of structure, what do we expect? We expect that the market travels to somewhere around here, then give us another break of structure. But then the 4 hours time frame is done with its pullback. It wants to give us a higher high. For the 4 hours time frame to give us a successful higher high, the 15-minute time frame has to give us a pre-information that the 4 hours time frame is about to give us another high. So the 15-minute time frame will quickly change character. This is where we, the smart money concept traders, SMC traders, come in. Kindly spot out our zone. Clear? See it. Take the buys, target the 4 hours time frame, target the recent high of the 4 hours. This high here, we target it, we mark it out, then we target this high. Simple. So I have explained here. Let's take it to the chart so that I can apply it so you can see how it works. Let's go down to business. When you approach the chart, this is 4 hours time frame. This is 4 hours. When you approach the chart, you mark out your recent break of structure. You mark out your swing low. We have a swing high here, but as time went on, it gave us a change. The market gave us a change of character. This becomes our change of character. Then we have the highest point of this trend. Now let me mark this in. Let me use the path and do a directional bias on this so that you will understand what we are doing here. See? Good. Now let me remove this thing now to a more clear place now. If you are a newbie, pay attention. Let me dress it properly. If you are a newbie, pay attention. This is a bonus to you. Good. This is the current market phase we just spot out. But then I brought this one here to give you a clear understanding. You understand? If you are a newbie, this is a bonus to you. Pay great attention. We had a break of structure here. Then we had a swing low, a swing high rather. We had a swing high that later on became our change of character. We spot it out clearly. Change of character. After the market has put up a break of structure, a swing high, then give us a lower low, we are expecting that when the market comes somewhere around this place here, it will continue dipping, but then it did not dip, it just continued going up. In that scenario, it went up and gave us a higher high, making this to change to a change of character. What are we then expecting next? What we are expecting is that the market comes to this place and then give us what? The market comes to this place and give us higher prices. Simple, right? If you are a newbie, take this thing now, go and rehearse it, practice the act of spotting these external structures on your chart. When you master that, you know that this thing will become very easy. It's just like for us now that we have mastered the act of manipulating the chart like this. This thing is like it's living in our vein. If somebody should wake me from the bed and just point a chart directly to my face, I can describe it, tell you everything about the chart. If you get used to the chart like that, bro, trust me, you are 90%. You are at profitability already. All you just need is risk management and emotional intelligence. You are there. Let's take it back. Simple. Good. So what we are expecting is higher prices. Nice. Let me remove this. This is where I introduce you to the concept of premium and discount. This is not the complete settings of a Fibonacci tool, but if you want the complete setting, just drop on the comment section settings and I will give you the complete settings. If you want the complete settings of this Fib tool, it means that you are an advanced trader. For newbies, this is the only thing you need for now. Once you are done mastering the act of using this one, that is when you request for the professional Fibonacci tool that assists you in giving you the areas you should look out for in terms of taking your entry. But then the concept I want to explain in this video is the concept of premium and discount. When the market is in a bullish phase like this, we expect that when we are pulling back, we buy from a discount level and then sell at a premium level. Right? Simple. The main thing we are using this line for is to indicate where we have 50% of the trading range, and this is where we have 50% of the trading range. This becomes our discount and this becomes our premium. Simple. We want to take trades from around this place and then sell at the premium. Everybody loves discounts. Everybody loves when there is discount. We buy at the discount level and sell at the premium level. That is pretty much simple. Now we know that this market is currently in a pullback phase. We are expecting higher prices. If you can recall very well, you will recall when I talked about the internal structure. You can see them. These are the internal structures that are forming internally. These ones, all of them are structures that are forming internally. Let's go deep into the 15-minute time frame and then study the structures and study how these structures are going to help us take trades. After having this high, we begin to have lower low here. Begin to have lower prices. Remember what I explained in the 15-minute time frame, right? Then we shifted from bearish to bullish. You see, we shifted from bearish to bullish, and we are currently in our pullback phase. We are expecting price to pull back to anywhere around this place where we can take buys. Let's clearly mark out some of the structures that are going to help us to understand. This is a break of structure. This is another break of structure. After this break of structure, what do we see? We saw that the market was trading low, but then it came back to this place and break to the upside, causing this place to currently become a change of character. It was previously our swing high, but it's currently a change of character. You see it. Immediately you spot out the change of character. What next? You spot out your swing low. Swing low means the lowest point of the trend. See, some people make mistakes of thinking this here is their swing low. This is not your swing low, bro. This is internal structure. You see how we spot it very clear. After this break of structure to the upside, after this break of structure, everything that happens inside this place is internal structure. The only place we want to look out for is either the price break out of the swing high or the swing low. Funny enough, price broke out from the swing high, causing our swing high to become a change of character. But so then, what are we looking out for? We are looking at that price will come into somewhere around this area, then give us higher prices. But then we can actually cash the sell. So how do we cash the sell? This is what I'm going to explain to you in this video. This will be one of the best videos I've ever recorded about SMC because the breakdown here is massive. We mark out the swing high. After marking out the swing high, we expect that price to go to lower prices, right? 1 hour time frame give us a very clear picture. It makes the analysis not to be so choppy. You get when the analysis becomes very choppy, it becomes confusing. That is why you see 1 hour time frame is added to the time frame that I look out for. After we mark this clearly, we now go to the 15-minute time. In the 15-minute time frame, you see that things are much more detailed, right? Now let me show you the trade we took this week that played out very successfully using this strategy. After confirming that the market has changed character to the upside, it gave us a high, a low, a high, then a low. What did we do? Simple. Kindly spot out the structure. This is also a change of character, but this is internal. External change of characters, if you see them, you will know. The market is no longer, it's coming back for a pullback phase. But this is another kind of change of character that happens internally most of the times. When this happens, this becomes our internal swing high. After marking the internal swing high, what next? You mark internal swing low. See, this is the low. We now have internal swing high and internal swing low. The only where we want to focus in is what is happening inside this place. We look out for our point of interest. In the search of point of interest, we see that currently here things are not really clear. We move over to a more higher time frame to look how things are. When you come over to the 1 hour time frame, you see that all these candles that were gathering around are now like two unique candles that explain what you really want to see. That is the power of higher time frame. It gives you a great picture. That is why both higher and lower time frame are all good. They play different roles in making you understand. See how this one becomes two candles and very clear to understand. But then when you go to the lower time frame, you see a more detailed information in this very area. Now people used to ask me, what is the perfect time frame to trade? What is it? No, there is no perfect. There is nothing like perfect time frame to trade. If you are asking that kind of question, it means that you are not even understand what you want to do. You get all these time frame work together to give you a better experience. Simple as that. We go back to the 15-minute time frame. Spot our liquidity zones. This trade happens to be a very unique one because we had liquidity both to the upside and to the downside. Liquidity, this is liquidity, and then see how it happens here again. This happens to be a very unique pocket of liquidity. So what are we expecting? We are expecting that when the market should come here, clear the liquidity from the upside, then tap into this point of interest, then go into our direction. This is how I marked it that day. See, this was how it was before the trade started playing out. Okay, now we have a change of character, we have a swing high, a swing low, we have liquidity pull for the market, both to the upside and to the downside. So we expect the market to clear one side then clear the other side, right? So let's go and play price now. What are we waiting for now that we have spot out all these things? After the market clears out this liquidity, we are waiting to see that on the lower time frame, on the 1 minute time frame, we want to see something like this, then a change of character. This is where we are interested in, where this becomes our break of structure. Start from here, have here break of structure 1, break of structure, and then a change of character. Change of character, a BOS. As simple as that. Okay, where we want to take our trade from is from this high. Mark out our swing high. We are waiting for the market to come back to this place so that we can take a sell. Remember, we are riding a pullback. We are riding a pullback. Tap into this place in a 1 minute time frame, then we catch our sell. As simple as that. Just open the chart. You see how confusing it was. Now, after we mark all these things very clear in such a way that even a newbie can understand it became very simple. That is how you also understand the market, if you get to master the act of understanding the market structure. You get. Let's play price and see how things go. Yeah. First, let's remove this. Okay, it's approaching the liquidity. Let's mark the highest point of this trend so that we will know if this liquidity pool is over. Let's play price. Good. Yes. We now go to the 1 minute time frame. When the market shows you liquidity in a very clear zone like this, even if it doesn't get to your point of interest, you have all the possibility to take the trade because the market makes it very clear for you. What do we see here? The liquidity has been cleared and everything is now very clear. We see a break of structure and we mark out our swing high. We mark out our swing low. Mark out our swing high. It's just the same thing. The same thing in different time frames. Okay, we play price. Okay, let's see what we have here. Our swing low becomes our change of character. What are we looking out for in the 1 minute time frame? We are looking out to cash sales, right? Good. So after you picture out this in the 1 minute time frame, what do? Look out for your entry model. See, let's go to the 5 minute time frame and validate the order block. 5 minute time frame is saying we have marked the right place. Then 15 minute time frame, I've said it all. What next? Back to the 1 minute time frame. What is the liquidity we are keeping for the market? We are keeping this as liquidity. The market should liquidate it and protect our order block. We place our trade. We cover the highs. Very, very important. The market may want to go and manipulate our highs before it goes our direction. What I always advise is get a $100,000 account for people that are ready to trade are ready to face the live market. Risk 1% of that $100,000 account. 1% of that account is $1,000. Risk 1% on every trade you take. Your target should be 10 trades with the evaluation phase. Once you are done with the evaluation phase, you then move over to the live account, right? So if you reach 1% of your $100,000 in this trade, let's see, go to the 15-minute time frame and spot out our target for this trade and the reason why we are targeting that very place as our target. This swing low be our target. You know why? Because this is a 15-minute time frame trade. You get, it's actually a 15-minute time frame trade, so we target the 15-minute time frame structure. This swing low is our target. Now let's go back to the 1-minute time frame and see if we are tagged in. Everything is being spotted out clearly. Let's see what happened. Display price. Okay. You have not tagged us inside. Does not tag us inside. Does not. We are not yet in. We are not yet in. We are not yet in. Okay, let's keep playing price. We are tagged in. We are tagged in. We are tagged in. Okay, we are tagged in. The market almost did not tag us inside. If your prop firm is not having a good broker, then you will not be tagged into this trade. You get, the prop firm should have a good broker. Your prop firm does not have a good broker, it might not tag you inside. See, actually moving. It's moving, it's moving, it's moving, it's moving. Immediately you see this, you break even. Break even. What is the meaning of break even? Break even simply means you move your stop loss to your entry. Should in case the trade from this place now is going and you are very, very excited, it turns against you, you will not lose anything. One of the most important things I do in the market is to protect my capital. Opportunity will always come. Will you always have the capital to take the opportunity? That is a question you should ask yourself. Break even. Trade management is very, very important. I'm so shocked that no one is like emphasizing on trade management. Manage your trade. Stop loss or TP is for people that have background money. Background money means that money, if anything should happen to the money in your trading account, you will still be alright. You will still feed yourself 3 times a day and the rest. If you don't have that background money, manage your trades. Take partial profit where you see that the market is no longer going a way you don't understand. You can take your complete profit, as the case may be. That is a story for another day. All I'm here is to give you a breakdown of market structure. That is what I give to my students. You get, it's just a tip of love to my YouTube community. All right. So let's play price and see how everything works out. Let's move to 15-minute time frame and move it to a very high gram. See, had a very nice delivery in this trade. Successful trade. Take everything I have done here, go back to the chart, replicate the same thing. Try to practice it over and over and over until you master the strategy very well while trading with a demo account. Then if you see that this strategy is what you really love to be doing, you now start applying it to the live account. You get, go and practice. Get a pair trading view. What is the function of a pair trading view? A pair trading view helps you to backtest the previous actions of the market. Like now, this is a backtest. I don't know, I might put where we took this trade. I might put this trade on the screen so that you see where we actually marked it and where we took the trade. You get simple trade breakdown. You can apply and then get the same result. I'm going to start my mentorship classes very soon. If you want to trade with me, if you want me to mentor you on how to catch trades like this, give it up in the comment section and I will notify you when I start. Alright? See you guys in the next video. Remember to subscribe to this channel. Share this video to your guys that are struggling with trading so that they can understand how to trade smart money concepts. Let's make this money together.